So in the last video that we did, we talked a little bit about how to structure your organization if you're thinking about looking for venture capital funding. This episode, we're going to talk about something that we kind of glossed over in the last episode, and that is angel investments, why those things are important, even if you think that you're ready to go straight to the Series A, why it's good to have those people in there. And then also what each of the different rounds of funding might end up meaning so that you are informed about what they're going to be looking for as you go through this process. So my name's Drews McFarland. I've been a serial entrepreneur for a while. Let's just go ahead and get into this. We're going to talk a little bit about angel investment. Last episode, we talked about venture capital and how as that Series A ends up working. The angel investor is often the key to whether or not you're going to end up getting a really good Series A. So angel investor in short is really somebody who's not really a VC. They don't have the financial wherewithal to be a VC, but they still want to get in some of that lucrative game that we talked about earlier on that the VCs get to do. An individual doesn't often have the power to be able to do an investment like a venture capital, so that's why you have angel investors. The important thing when you start going down the path of doing getting a round of funding is why are you doing that round of funding? There's a number of different reasons why you could. The worst reason that you should go out and get a round of funding is because you need money. Like, it sounds counterintuitive, but when a venture capitalist comes in and starts doing the due diligence on your company, they're going to tear through your financials. And if they can see that you've got a runway of about 3 months worth of time before you can't make payroll, they're going to smell blood in the water, and they know the time's on their side, and they get to go in and kind of drag their feet. And every day that goes by, you're going to get a little bit more desperate, and the terms that they end up being able to take advantage of end up getting better and better. You don't want to be in a situation where you're racing against the clock to get that round of funding. That's where the angel investor comes in. The angel investor usually comes in before your Series A, and they're going to give you some sort of a level of investment. Now, something that's, and again, there's no hard fast rule on this, but something else that constitutes usually an angel investor is the size of the investment. Different venture firms are going to be interested in different sizes of investment. Tier 1, Tier 2, Tier 3, where if you're dealing with a company like a Sequoia or a Kleiner Perkins or something like that, they're not going to be interested in you if you need $500,000. They're just, you're not even going to get a meeting. They're not really even going to be interested in you if you need $2 or $3 million. They have a large fund to try to allot, and they want to be dropping $10 million, $15 million into companies that are pretty sure things to go the long haul. You get the medium tier, and they're going to be the larger investments, 5, 10, 15, or whatever. And then you get the tier 3, and they're going to be 2 to 5 to 10, or like usually the smaller ranges of investments. And if you go into the wrong sized organization, looking for the wrong size investment, you're not going to get that meeting. So know how much you need, know how much you want to be asking for, and understand what the typical investment of each one of these VCs are before you walk in and make that meeting. But you want to go in there with your pockets pretty full, with a long runway, showing that you can go 6, 12 months or so without really being desperate for money. That's where the angel investor comes in. They will be able to come in, and typically they're good for 100,000, 200,000. They've done reasonably well, and they want to try to take advantage of some of this stuff. What terms do they get? Because we talked about how that entire thing gets structured in the first video. And if you haven't watched that first video, please go back and check that one out. The nice thing about an angel investor is they're typically not going to be able to dictate some of those terms. So what they'll end up doing is they'll do an investment with the understanding that you're going out for your Series A, with the understanding also that they will have terms that are equivalent to that Series A. So they'll invest in you, and they want to get the same terms that the lawyers for the Series A venture firm end up negotiating, and then they can just kind of go in for the ride. So they just sort of like whatever you end up negotiating, that's fine with us. Whatever your pre-money, your post-money valuation is, we're going to be good. Here's our money, and we're going to figure out how many shares we end up getting from that based on what you end up negotiating with your Series A. Having that money in your pocket helps you dramatically when it comes to talking to the venture capitalists, because again, walking in hungry is never a good situation. You really want to walk in there with a degree of confidence that you only get if you have that runway and you're able to make payroll for a while. Who are these angel investors anyway? How do you find them? Where are they? Really it can be anywhere from Uncle Phil, who just happened to do really well in the stock market. Sometimes organizations in different areas where you can look out and they've got things like the Band of Angels or whatever, where it's a group of people who may not have the 100,000, 200,000, but they can all pitch in. It's almost like a mini venture capital firm. Who's an angel investment and angel investor is really a matter of just who's got money kicking around that they'd like to be able to get a high rate of return on. It's just a simple matter of that. And again, it's a high risk situation. So going to a close family member, you have to make whatever piece that you want with that. But larger firms, as you get into bigger structures of angel groups, the amount of rigor and due diligence that they end up doing in advance ends up going up tremendously as well. So there's really a broad range of angel investors, just like there's a broad range of venture firms. I hope that you found that helpful and informative. If you did, go ahead, please hit like and subscribe below. If you know somebody who's getting ready to go through a startup, please feel free to forward this out to them if they're going to be able to take advantage of this information. My name is Drew McFarlane, and I look forward to speaking to you next time.